Here we go. Let's do some Top That Trade. Joining us right now, our top players, Flynn, a Fox Business Network contributor, and Knuckman, the chief market strategist at bullseyeoption.com. Round one in our trader game. Fear factor. It's been a fearless year for the stock market, but one study on marketwatch.com shows there is a creepy day in October that could scare investors away from this market boom. Is it better to remain fearless about the market or run for cover this fall?
Well, it is some interesting research that they've studied over the last hundreds of years that it seems to be the Halloween effect that after the end of October, the markets typically rally more than they do in the summertime. So it's an interesting fact. I didn't even know that was the case, but that's when we made the lows there in 22, and we've been straight up since. So we'll see. For me, July is going to be hot, though, because that's an 80% chance of the rate cut, and that's going to heat things up.
It's kind of interesting when you talk about October. The reason why after October the market does so good is because a lot of times going into October, there's a lot of selling right at the end of the summer. In fact, some of the most dramatic stock markets in history, one I remember even in 1987, 1927 crash happened in October. So there's always this fear in October. And it's almost like if you can get to Halloween and the market hasn't crashed, then you get FOMO, fear of missing out. And generally, then you flip from the fear trade of Halloween to the Santa Claus rally. And it's happened more often than not.
We've also been in a 50-year bull market. So I guess any time is a good time.
Round two, oil and gas mix. Crude oil is up about 25%, nat gas down about 40%. Which energy has you pumped to play?
You'd like to say natural gas, but I'm afraid you're going to have to be really patient because the situation in natural gas fundamentals is extremely bearish right now. We have a supply glut. We're not cutting back production enough. And because we didn't have a winter here or in Europe, supplies are high everywhere. The problem is, and I've talked to a lot of people in the industry, is that the producers are not cutting production back fast enough to get to the glut. But if you can go out to December and try to buy some calls, they're probably pretty cheap. But we're going to need help from Mother Nature to save this market, or we're going to see some bankruptcies in the natural gas production area.
We're back to hot summer. A hot summer could really get the electricity demand going again, that a lot of it's generated by natural gas. For a risk-reward standpoint, we're down here at 10-year lows. XLE, the ETF that tracks all the energy stocks, has got a PE of 8. So this whole sector is set up for some strong moves here. And just looking at historically, and Phil pointed out there's a lot of bad news in the natural gas market. That's usually time to start paying attention.
Round three, late adopters. Those old school tech companies are playing catch up. IBM shares traded to a record high this month after adopting AI. What's your legacy tech pick?
I think some of the old dogs are starting to get some new tricks here. And you saw Apple invested in a lot of AI startup companies. And so they'll come around. So I like the laggards, as I often do in any market, but I'm liking Apple and Google as the best right now.
But AI in the energy space is a game changer. And that's why people are looking at this sector as being extremely undervalued. They're going to be able to produce more with less emissions and a lot smarter. And that means this sector is the place to be.
So you're saying smarter is better?
I figured that out. It took me a little while. I guess I'm kind of dumb.
Here's your bonus round question for today. It's spring. Let's do a spring ticker time. Yes or no? Are the following tickers trading at this time? Spring, shower, green.
They are all true.
Fake
Is the correct answer. Great job, guys. Go to businessfirstam.com for where to see our show on TV.